Today's Swiss National Bank rate decision remained unchanged at 0%. As a result of this, the Euro-Swiss franc made a daily low of 120.080 and a high of 121.08 in the minutes following this decision. Today I'm joined by Julien Manceaux, Senior Economist at ING in Brussels, to discuss his views on this decision and give his outlook for the Swiss economy. So Julien, what do you think of this decision?
It was quite expected, actually, because, of course, the SNB had to intervene a lot during the last few months. We now see that FX holdings are at their highest level ever just right now. But technically, there is no limit to what the SNB can do to support the floor, and we think actually that right now pressures should abate a little bit from the safe haven demand side, thanks to rather positive developments in the Eurozone.
An inflation rate of -0.6% is expected for 2012, 0.2% for 2013 and 0.4% for 2014. The SNB believes there is no threat of inflation in Switzerland for the foreseeable future. Do you agree with this?
Domestically, it's for sure that inflation threats remain quite subdued. If you look at core inflation, it's for sure that we remain in deflation in Switzerland right now. Now, even with a strong Swiss franc, higher oil prices are already fueling in the consumer prices, so the overall index. We see that the headline index could, in fact, become positive again at the turn of the year. So Switzerland should end its deflation period at the end of the year. But domestically, it's clear that price pressures will remain very low, and this is reflected in the SNB forecast. So it seems that the SNB does not expect oil prices to remain that high very long, and so that pressures coming from oil prices will also abate in the beginning of next year. For the SNB, it's clear that the outlook remains quite safe for what, as far as inflation is concerned, in fact, and this is why they can keep with their very expansionary monetary policy right now, and that they can continue to support this floor against Europe.
The SNB's outlook for growth is around 1% for Switzerland in 2012, compared to the 1.5% projected in the June forecast. What is your outlook for Swiss growth?
Basically, since the beginning of the year, we were more agreeing with the first view, which was the 1%, because the SNB changed its outlook in June from 1% to 1.5%, and now they are back to 1%. Probably because the second quarter, that surprise, I would say, with a slightly decreasing GDP on a quarterly basis. Basically, it will depend on the third quarter, and you can say the same thing about the Eurozone growth. And all the leading indicators that we have for the third quarter, unfortunately, are not very good, because the activity indicators, look at PMI, at the COF, or even consumer confidence, were quite low at in the second quarter, so that the third quarter confidence was still quite low. So I expect another negative figure for GDP growth in the third quarter, which will make hard for the Swiss economy to achieve anything above 1.5%, that's for sure. So we expect growth to be between 1 and 1.5 for this year. If the fourth quarter is very bad, you cannot exclude something below 1%. But recession should not be. It should not be a recession for the full year. So we still expect a positive GDP growth for 2012.
Thank you, Julien, for sharing your views on the Swiss economy. Stay tuned to keep up to date with the latest Forex updates and economic news. Goodbye.